What's up, beautiful people? Stock analysis is back, and on today's episode, we're going to be looking at Costco. Let's get into it. All right, so Costco is basically like a wholesale warehouse company. They sell primarily groceries, but they also sell clothes, furniture, and one key aspect about Costco that makes it different from, like, let's say you go to a Target or Walmart is you need a membership to shop there. So, in order to enter into a Costco to buy anything, you need to show them your membership. Before we get started on Costco, I just want to say I am not a financial advisor. Therefore, anything I say is not financial advice. I am just a YouTuber who is passionate about stocks and I want to talk about it and maybe inform some people about Costco. So, when we look at companies like Costco, one important indicator we'd like to look at is whether they own their own buildings or if they're leasing them. This is important because it's going to let us know how their debt situation is going to look like. When we have companies that require buildings in order to operate, it's very expensive for a company to just build a warehouse, especially with Costco, right? Normally, Costco warehouses are huge. Therefore, they have to pay a lot of money to build and operate. So that's a lot of money that they have to pay up front. Therefore, they're going to lease the building or even lease the land to other people in order to start operating. Therefore, their debt isn't going to be tied up in leases, it's going to be tied up in other things. And one key to note is that most of their buildings are in the United States and Puerto Rico and Canada. I just want you to focus on that for a minute because it's going to be important later. So when you analyze any company, you want to look at their net sales. You want to see how they're making their money, where they're making it. Is it growing? Is it decreasing? It's very important to know if your company is making money, basically, right? You don't want to invest in a company that's not making any money or is even losing money. So when we look at Costco, we can notice from 2021 to 2023, we see a huge growth in net sales. We can also see that most of their net sales are in United States and Canada. This makes sense because, as we saw previously, that's where most of their stores are located. Another key aspect, as I mentioned earlier, for Costco when it comes to making money is their membership fees. In order to buy anything at Costco, you need a membership. And as we see so far with their membership fees, it's growing, right? I mean, it's obvious. From 3,877 to 4,580. Their membership fees are growing, but we could tell that the membership fees aren't really too important, as in Costco doesn't really rely on it. It's just like an extra benefit. Next, we want to look at its profitability. Not only do you want to see the net sales, but you want to see if the company is profitable, right? Nobody wants to invest in a company that's not profitable. As we see in revenues, again, like with net sales, total revenue is increasing throughout the years. Operating expenses are getting more, but that's pretty traditional for a company that's main focus to selling, groceries and things like that. And so as we can see, net income is growing pretty steadily. This is pretty good because we don't want Costco to outperform like crazy 1 year and then notice that its profitability is slowly going down because that 1 year was just that amazing, right? We want steady, slow increases in profit. One key thing to note as well is when we look at their gross margin percentages, this is just basically their net sales minus the cost of goods sold, meaning how much money it costs to sell the good. As we see here, their margin started off at 11.13%, went down to 10.48, and it's starting to rise again at 10.57. I'd say this is a good margin for Costco, especially comparing it to different years. As you can see, from 2023 to 2021, their gross margins actually went down. So that's something you would want to look into. Why is their margins going down? Another key indicator to look at as an investor is shares outstanding. And as we can see with Costco, they have a buyback program. So what does that mean for you as an investor? That just basically means that there's going to be less shares out there to buy, making the shares of Costco rise in price. Another key indicator to look at is the return on investments, or as a lot of people refer to it as ROI, of a company. A high ROI will let you know how good a company is being managed. Not only that, but it's going to let you know if the company is making money off their investments, right? So for Costco's case, at 18.38%, let's say if Costco invested $100 into something, they're going to get $18.38 back. A lower ROI will let you know that the company probably isn't being managed efficiently, especially when it comes to investments. Obviously, they're not going to be making as much money back on their investments, which is something you want to look into. What is Costco investing in? So let's look at the bull cases of Costco. If you don't know what bull cases are, that just basically means why you should invest in a company. An investor's way of saying they expect the price to increase because of this scenario that could happen. So when we look at Costco, I'd say the biggest bear case it has is expansion into foreign markets. Markets such as India, China, Africa, the Middle East. Basically, Costco makes a lot of money, and it's only really deep into the United States and Canada. If Costco can find a way to tap into these foreign markets that it hasn't already, Costco is looking at huge growth. I'd say another really good case for Costco is that they're strong against rising prices, aka inflation. Because you have to pay a membership in order to buy anything at Costco, this allows them to put their prices lower compared to other retailers who don't require memberships to buy their things. Let's say you shop at Costco and your membership is $120. Yeah, that's a lot of money just to be able to go into a place and buy whatever. But if you do the math, you will realize that you're going to save a lot more money versus going to another retailer that won't require the $120 fee. And you're going to want to pay the $120 if you're going to save more money in the long run, right? That's why Costco has so many members, because their prices are just that strong. They have very strong pricing. The last bull case I'm going to talk about is how many people have Costco memberships. 68.1 million people. That's a lot of people. And just to bring it back to my first point, this is really only accounting for people in the United States and Canada. So imagine how much bigger Costco can get if it can go into these other markets. I'd say the biggest bear case for Costco is expanding into foreign markets. And I know I said that was a bull case, but it's like a double-edged sword. Expanding into foreign markets is very difficult. And if Costco struggles to expand versus other retailers, and if Costco struggles to expand into foreign markets compared to other retailers, it's going to slow down the competition, and it's going to lose that advantage of being the first one into foreign markets. Not only that, but imagine how much money it's going to cost for them to go into foreign markets just for them to fail. Remember when we were talking about owning buildings? It takes a lot of money to even start up a Costco. You got to imagine it has to get the big warehouses, and then it has to get its merchandising in there. That takes a lot of time, and that takes a lot of money. Another bear case, and it's going to be the last one I'll talk about, is their potential for low margins. Costco's main driving factor is that you're going to buy the things and you're going to buy it cheap. Because they buy it cheap, Costco is looking at not too high of margins in order to keep that advantage, right? Let's say that Target, for example's margins are 15. Costco is looking at, let's say, a 10. People are going to go to Costco because the prices are cheaper. Let's say that Target now lowers their prices. Costco has to lower their prices again in order to keep that advantage and to keep people from buying their stuff and to keep people on their memberships. Verdict? So my final verdict on Costco, I'd say Costco is a very promising company with a lot of potential for growth into foreign markets. Matched with growing sales, a growing membership, a loyal customer basis, low debt, you're looking at a very safe company here. However, if Costco cannot expand foreign markets, its potential growth is very limited. However, if Costco cannot expand into foreign markets, its potential growth is very limited. You could only have so many stores in the United States and remain profitable. Overall, with Costco's high valuation at a stock price of $694, I do not believe Costco is a buy right now. With its high price, there's not going to be a lot of returns when it comes to investing into Costco. And I understand that Costco does offer a very good dividend. Even said, Costco is, in my opinion, way too high, and you should consider cheaper alternatives in different markets, like in the tech field or even in medicine. This is Akinomics, and that's my stock analysis of Costco. I hope you enjoyed.